You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time once again for the good old OB. The Option Block, your bi-weekly source for all things options related. If I sound like I'm back to normal, it's because I am. I'm back in the studio here in not quite so sunny Chicago, not quite as warm as Florida. Got out of that conference just in time. It sounds like the conference world is pretty much imploding. We'll get to all of that in a little bit. This front portion of the year is usually just jam-packed with a lot of events. You guys have come to expect us bringing you a lot of content from those. Maybe a little bit of a wrench thrown into those works, like I said. But we got the RMC conference in under our belts. We'll chat about that in a little bit and all sorts of other fun stuff. Of course, you guys, as always, can join us live noon Central, 1 p.m. Eastern every Monday and Thursday on the old Mixlers or after the fact on your device of choice. We don't judge. However you want to listen, Spotify, Pocket Cast, Google Podcasts, iTunes, however you like to get it, head on over, enjoy. And, of course, if you like what you're hearing, leave a review to help others continue to discover this ongoing juggernaut of a program, which probably have some interesting new wrinkles coming next couple of weeks, I think. So we'll stay tuned for that. And joining me to help me continue the joy, the fun, the journey that is the option block. Let's start off in the land that is always free of disease and plague and strife. Of course, I'm talking about St. Charles, where we are joined once again by the ever optimistic, ever bullish Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the show, you perma bull, sir.
Good to be here as always. Happy to be here and got a lot to talk about yet again today.
They used to call Rock like the Brahma Bull or something. You could be the Perma Bull. How's that sound?
I've been called worse things, especially with bull in the title.
We'll leave that to the imagination and move on out to the hinterlands, where another guy has probably been called a few worse things in his day. We just call him the Rock Lobster. Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. To you as well. Also safe and secure in your fortress compounds on the far eastern shores of Maine, sir. Welcome back to the program.
It's good to be back here. That is probably by far the kindest intro I have ever had on this show. After almost 10 years of doing this show, that is the nicest intro I think I have ever gotten.
Well, you know, I'm in a good mood. Hey, what can I say? I'm back. Most things are firing on all cylinders as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show we break down what the heck is trading out there. And there's a lot of trading going on yet again. It's been a crazy, tumultuous week. You know, hot on the heels of our last show on Monday, listeners, where I was beaming in from the Risk Management Conference out there in scenic and sunny Florida. We saw the Fed come in and inject themselves into the marketplace. A surprise 50 basis point cut. Yes, 50. Everyone was expecting them to do something at the meeting later this month. Not so early, and not indeed pretty much emptying what's left in their chamber, the half a basis point. That's a lot of their bullets they just used up. So, and you know what? The market pretty much ate it up. They ate up all those bullets and said, you got any more? Oh, no? Okay, we're going to turn back to the dark side. Because it was good for what? Maybe 25? I don't think it was even 50 points in the S&P before it turned right around again and went back to the dark side. And then, of course, we saw some interesting evolutions on the domestic political front this week, which seemed to give the market a bit of a lift yesterday, as we saw coming out of Super Tuesday. We saw good old Joey B, Mr. Biden, resurging against Sanders. So now we have a clear two-dog race. We've got Sanders on the far progressive left side. We got Biden in the more moderate side. Take a guess which camp the market prefers. The market rallying off his resurgence. And now today, coming back on the heels of that big rally yesterday, we're seeing most of the markets yet again back in the oh no, oh woe is me phase, with pretty much everything off about 3%, if not more. NASDAQ actually the laggard today, shy of 3%, about 2.95%, even though it is ticking up. Give it a couple of seconds, it'll probably break 3. S&P off about 3.4%, and the Dow leading the charge to the downside off 3.5%. So S&P still over that much ballyhooed, much watched 3,000 level. Got about 22, 23 handles left to go to break that to the dark side yet again. So we'll see if we can do it yet again or if we can maintain some resistance out there. Our old friend VIX ticking up yet again, as you might imagine, up to about a 38.5. That puts it up about 5 handles from where it was this time last show. So feeling the froth, feeling the vigor out there. And our old friend VVIX at about a 116, almost 117. That puts it about unched from where it was this time last show, almost exactly. And our old friend VXX, you guys love to fade it until you don't. This is not a good week to be fading VXX because it's a little bit north of 26 right now, about 26.20. Let's see, how high did our old friend VX? This is actually the high right now. 26, about 20 is about the high. And let's see, that puts it up over 3 handles from last show, about 3 and almost a little over 4 handles actually from last show. So a lot of moving, a lot of shaking out there this week. A lot to unpack. Let's get to it. Let's go back the opposite of the way we came. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, what is lighting up your tape in this tumultuous week? What did you think of the Fed pretty much emptying their chamber and all the other madness that has ensued this week, sir?
I like it. Wow, excuse me. It's not the coronavirus, just allergies. I was actually pretty amazed that they emptied their chamber so fast. They were already pricing it a pretty good size rate cut. They're pricing it a pretty good size rate cut already, and they decided to jump the gun and do it anyway. So I was a little surprised by that. I have to be honest with you. Quite a surprise. That's all I'm going to say on that one. And as you know, and there's been a lot of stuff on Twitter like, okay, well, when they do these surprise cuts, it's always awful for the market, right? And they did that in 2002. You had 9/11, all that kind of stuff. We had the dot-com blast. Also, they did in 2008 early, right? They tried to get ahead. They also did do it in 98 because of the Russian crisis. So I tried to separate some of the types of moves. So 98 in the Russian crisis, now obviously the market was back higher in 99 a year later. And I think this is kind of a similar thing where they're just doing the surprise, trying to keep the liquidity going and people happy. And then obviously, because I think this feels like it's a more short-term thing. It could be wrong, but at least it's short-term and very unknown. And that's where we find ourselves at this point. And so as far as VIX goes, we just can't get away. Like, I think all the headline news, the algos are just eating all this stuff up. And we have, vol keeps going on. I mean, you have 3.5 points a day. 3.5% per day in SPX, at least. Like the intraday candles are huge. Sometimes are more, 4 or 5%. So you're not going to get away from a 35 VIX. We traded 40 again. And until we stop moving, the vol's going to stay this high. So things that are interesting, we talked about on the vol show last week. I don't even remember what I thought we would be back into the high 20s from where we were after last week. I don't think I'm going to be close in vol views tomorrow because this has not subsided. You know, gold is still going up. Treasuries are still going up. And until I think the numbers start to recede or something like that, I think we're kind of stuck in this until there's some sort of, the worm turn. And I'm looking at Chinese equities today, and hard to believe, but it's the only equity green on my screen besides volatility. Which I find quite surprising, actually. So anyway, actually now it all turned red. So I'm until there's like a turn of this screw somehow, where there's a sense of what this crisis is going to be and how much it affects business, which was what we all thought 3 weeks ago. I remember on the show, and I'm like, I cannot believe the market is discounting this virus. This is not right. So, and I didn't like being a Cassandra for that, but I'm not going to complain. But it's just not, it's obviously off-putting, and it's, it is what it is. And at this point, until something starts to turn the boat around, clearly the Fed is not going to be able to do it. This is like, I believe this really needs like concerted government action where somehow there's news into the feed like, hey, we're getting testing kits out there. We're testing people. We're quarantining. Where people can't travel. Like stuff like that, I think actually would be more beneficial because it would at least create the appearance that we're doing something to solve the problem. So as of right now, I would say this is what we have. And it does not appear that it's going to end anytime soon. But right as I say that, at the end of the day today, we could be back up 4% from where we are right now. So just this, I think, we have a high VIX for a long time, extremely backward, and don't expect it to go away anytime soon. So, if you're an investor and you want to look at some bargains, take your time buying stock. That's what I'm doing. I bought a little last week. I started buying some Cisco. I started doing buy rights in Cisco this week. And I'm still looking to add more. I'm kind of not in a rush, and I don't need to get the bottom. And, and as long as they're good names that I think the companies will come through all this, that's what you're doing if you want to be an investor. If you're a trader, I think you've got to buy the realized vol. So anything that gives you positive gamma, we talked about on the show last week in the Vol View show. Still, it's the guys in the pit chat are doing, and that's the way you survive this market. Kind of hard, to pick bottom selling puts and stuff. I think that's very, very difficult right now. It's not a game I'm playing myself. So, except in individual stocks where I don't care if I own them or not, because some of them are down pretty substantially. I just mentioned Cisco because anytime it's below 40 now, I'll add some. So it's there, and I'm going to buy some, and we'll see what happens. So that's where we are. But I'm not touching any oil right now. I'm just trying to figure out what's going on in there. And I think natural gas is just destroying the whole oil and gas space. So, but that's where we are.
You mentioned buying the realized vol, Mr. Rock Lobster, and I was just down at that risk management conference. It's shall we say, a unique clientele who attends that conference, very deep down the vol spectrum. So I happened to run into. So I don't really know the person, but they recognized me a little bit. So we were chatting. I said, "How are you doing?" Their response, a response you would only get at a conference like this, was, "Oh, I'm great. I'm long gamma. And if you're long gamma in this market, you're God." So that was the response I got when I said, "How are you doing?" to someone down at the risk management conference. So I like that. I like that. So if you're long gamma, you are God, Mr. Rock Lobster. Are you down with that?
As I said, you can go join my Vol Trading Club and see how to do it. It's not hard. You just got to know how to do it. But I think it's this is a trend that I am not on the side of fighting at this point. Let's just put it that way.
Yeah, and clearly that fellow was laughing all the way to his long Gamba Bank. Uncle Mike, sir, I hope you have uncovered your ears now, because I know you were deeply offended when Mr. Rocklaps would have the temerity to bring up the name that shall not be named, a.k.a. Cisco, on this program. He's doing buy rights in Cisco. How dare he? How dare? I'm sure he took umbrage at that. So first off, let us know your umbrage about that. And B, are you buying into that right now? If you're long Gamma, you are God, sir.
No, there's only one God. I'm not going down that path. But I guess it just depends on which Gamma you're long.
How about a God in like a Greek pantheon style? How about that?
I guess it just depends on what Gamma you want to be in. But yeah, if you're long calls and the Gamma went against you, then you're I guess you're the reverse of God. You spell it backwards, dog, with that. But that's one way of looking at it. But this in markets like this, if you're long puts and the Gamma works in your favor, it's a very powerful force. No question on that. So a couple of things with which I'm looking at right now in this market. With it, silver has not come to the gold party. Gold has been rallying a lot. Silver has not joined it as of yet. So kind of curious as to seeing how this will play out when if silver ever gets on board with us. The other thing today, the great show title I'll suggest for you today, jump on the boat with the 10-year note. 10-year note yield went below 0.9% today. It's a record low in the 10-year note. And so that definitely says that there's a huge rush to safety at this point in time of where the money's actually flowing towards. With that, it's also I'm getting calls from clients wanting to know if they should refinance their house right now. Not that I'm a mortgage broker, but definitely it's something to look into now if mortgage rates are lower. But some things I'm looking at as a market participant, for the aggressive trading with which I do, we're negative on the year. And so if the market's not strong enough to at least be positive on the year, then it's not a market I really want to be that much of a part of, quite frankly. And so to give you an idea of what I do have I'm probably 99% in cash still, but I did put on a really tiny butterfly, really far out of the money. So in case for whatever reason we go screaming back to the levels with which we were, and the World Health Organization comes out and says April Fools, and something like that happens, then that 1% of capital is going to make it a nice career for me. Not a nice year, a nice career with where I'm at. But if not, it's a very small amount, and I'm still even managing that. I'm still actually somewhat profitable on it from where I got into it yesterday with that position, or a couple days ago with that position. So that's kind of where I'm looking at right now. I actually got into half of my risk reversal again, in that with volatility doing what it does, it kind of resurrects some short puts that were dead to me a couple of months ago. So to give you an idea of it, I can't say the exact positions for compliance reasons, but the risk reversal strategy, when the market went higher this past December, I got out of my short put and just held on to the long call. The long call had a next to nothing cost basis on it because I got out of the short put for just a few pennies. So I held the long call for a while. When the markets went negative, I got out of the long call. And so I've been in cash up till actually earlier today. And so with the money that I had on the sidelines, with volatility doing what it's doing, I had, and this is for a longer term play, I was selling June. I was using this for June of this year, or June 30th, so the quarterlies. And so with vol coming up as much as it has and markets coming down like they were, I'm able to get back into a put that I got out of a long time back in mid-December at a pretty decent price, or a price similar to, or not too far off from where I got into it originally back in August. Market's still higher than it was in August, and I'm almost getting the price I got back in August for it. And it has an even further cushion on it. So when you have markets like this, you can get some opportunities on the put sale side of it if you already had money in cash to begin with. So that's where I'm at right now in the risk reversal world. I'm just doing half of it. I won't mess with the long call until markets are positive on the year, and then I'll consider it. But until then, I'm just going to hang on to the short put, which is pretty far out of the money. And we'd have to have another major shoe to drop for this one to be at risk along those lines. Now, is that possible to happen? Yes. Am I prepared for it? Yes. Will I roll down? Yes. And manage risk? Yes. But for right now, that's something that I'm kind of excited about. The fact that vol enabled me to do something that I did a while ago for technically more safety in the numbers of it. So looking at that, also just looking as everyone would expect, or most people would expect, bond prices are going up significantly right now. For some clients, I have them in my simulated index concept that I've been doing. That's kind of what I've based my whole career on, is that in lieu of market participation, you take 10 to 20% of your portfolio or your market-based portfolio, put it into my aggressive SPY strategy, and then put the other 80 to 90% into bonds of some sort. And so now people that are in that stent or that strategy or that combination are actually having a decent year this year now because of the fact that the values of the bonds that I have people in are going higher. And I've been in cash for a while on SPY, or in this stage, 99% cash. That's kind of what's happening. Now, this is very much an anomaly. It typically doesn't work this way. But definitely interesting and keeps me on my toes as a market participant when looking at such things. So that's where what's lighting up my tape at this point in time. For short-term trading, I'm with Andrew along the lines, and I'll quote Sebastian from a few months, or for like a year and a half back. For short-term trading, for me, I think this is a market for crazy people, if you're a bull like me. If you're trying to do stuff with volatility like Andrew's talking about, that's fine. But for what I do, if you're a bullish short-term market participant in that stage of what I do, or that section of what I do, this is a market for crazy people.
Luckily, we're all pretty crazy here on the show, so we get to dive in a little bit, see what the crazies are up to out there today. Listeners, coming into, as of a few minutes ago here, in the old trading block, we're seeing VIX doing a decent paper, but not quite maybe what you'd expect. Again, this is usually you'd see 3+% sell-off in the S&P. You'd expect, oh my God, VIX over 1 million. Not quite today, about 475,000 on the tape as of a few minutes ago. Again, we've seen this a few times now. We've seen this dance. We've been to this party, so it's not quite as shocking or perhaps as amazing as it was a few times back. The ADV is a little bit north of 700K now, though, reflecting just how active it has been out there. SPY at about 2.75 million. The ADV, 4.5 million right now out there in SPY. 4.5 million contracts a day is the average in SPY land. Just crazy town. The S at about 866,000 contracts. ADV, 1.8 million. The Qs, 504,000 contracts. The ADV, 1.08 million. And the Russell, at least the IWM flavor, at about 166,000. The ADV, nearly 500,000 out there as well. Rolling on out to the top 10. What's lighting up your tapes out there, all you crazies out there trading in this non-Uncle Mike market? Cost you only 127,000 contracts to break into the top 10 today. That gets you to Netflix. So again, maybe somewhat lighter than you expect. Number 9, we've got, looks like American Airlines, 137,000. Number 8, Baba, at about $1.45. Number 7, GE, 149,000. Number 6, Disney, up to $1.83. Number 5, AMD, 199,000 contracts. Number 4, Tesla only number 4, 227,000. Number 3 here, Microsoft. It's been hanging out there in the top 10 for quite some time and strong now. Number 3, 245,000. I'll have to look and see what's driving all this paper out in softy land. I know Microsoft, Andrew's a softy head. Maybe he has some insight into that. Number 2, Bank of America, about 250,000 contracts. And number 1 with a bullet, the old Apple, at about 546,000. All this volatility, it may be spooking you, but it was good for the overall options market. OCC reporting their February numbers recently, the highest volume month ever for the options business on record. We talked before, the Flowmaster talking about some individual daily records. So you get a few of those in a month, it's going to add up to the most active month ever for equity options. February total volume. This is everything OCC clears, remember, not just listed options. 568, almost 569 million contracts. That's quite a few. The highest month ever, up from 60.7% from a year ago, February of last year. So that's quite a bit. The previous record was 567.8 million contracts set in October of 2018, beat it by about 0.2%. So just squeaking by, but still enough for a new volume record. You remember October of 2018, listen, that's when the worm really first started turning from the upside, decided selling off quite a bit. It's not quite the Febocalypse, but it was a big sell-off there. Remember, December was actually the nadir of that year before we rallied again. So there was a little bit of an abating of the bull then, and that's what marked that big spike, that big resurgence of volume in October. Other nuggets here, the last 6 trading days of February comprised 43% of the total volume for the month. That's just on fire. With Friday, February 28th, clearing 48.9 million contracts, the highest cleared contract volume ever on record. So that whole week is just setting records pretty much every day, Monday, Tuesday, all the way up to Friday. Just a crazy record. Let's drill down into the options a little bit. Total exchange listed options, that's where we like to hang our hats, obviously, was, again, up 60% in February. It was 349 million last year. This year, almost 559 million. Equity options, drilling down a little bit farther, hitting a total of about 508 million contracts. It's up almost 61% as well. That includes cleared ETF option volume. That was about 208.7 million. That's a 75% increase. Remember, ETFs have been kind of a bit of a sore spot of late in terms of volume, flagging a bit, but now doing well. Index options also last year were kind of a bit of a sore spot. This year, at least for February, not so much. Index options, 50.7 million contracts. That's up 55.2% over last year. Worth noting, the futures also lighting it up. Remember, those futures are pretty much predominantly VIX futures. Not much else left for OCC to clear on the futures side. 10.096 million contracts in February. That's a 106.2% increase from February of last year. Pretty much doubling from this time last year. So a lot of interesting nuggets out there. Since we're talking about OCC and their counterpart, OIC, which you do a lot with on the show, kind of some sad news coming in this morning, kind of hot on the heels of earlier this week. I mentioned I was at the Risk Management Conference. Usually I go straight from Risk Management over there to the FIA Boca show, which is the big international derivative show there on the east coast of Florida. So I start off on the west coast of Florida for the RMC, then I head over to the east coast of Florida. A little bit of behind the scenes of my schedule in the early part of the year there. And Boca is where you've heard me do a lot of shows from there in the past, is where you meet up with a lot of people from the global derivative scene. Obviously, not exactly the time maybe you want to gather the global derivatives community together, including from areas like Singapore and Hong Kong and Japan and Italy and everywhere else. So FIA wisely deciding to put the kibosh on that earlier this week, canceling that. And we're just talking about OCC, just coming into showtime, we got the news, very sad news for us because we do a lot of content from there. The Options Industry Conference, the annual Options Industry Conference that we spend a lot of time at. We bring a lot of people to you from that conference. If you look at our studio here, listeners, it is just covered with content and panels and photos and posters from the various OIC studios you set up over the years. That conference got canceled. Well, that's the first time since I've been doing this that OIC has been canceled. Also, the first time Boca has been canceled. So that pretty much tells us what we're living through right now, what kind of times we're in right now. Kind of crazy stuff. I don't know, Mr. Rock Lobster, Uncle Mike, you guys don't really attend OIC, but it's a big show. I do a lot of stuff down there. It's kind of the annual gathering of the entire derivatives industry. I thought it might be safe because it's primarily a domestic audience, unlike the FIA show, which is primarily an international audience. So you're a little bit safer on that front. But I guess some sad news. I don't know, Uncle Mike, Mr. Rock Lobster, either of you surprised that Options Industry Conference off the docket for this year?
I think just businesses, everybody's just going to figure out that, let's just take the next 2 months off. No traveling, no flying, nothing unnecessary. The U.S. is pretty decentralized. Oh, I just sold some call spreads. So I never thought I would sell them at that price, to be honest. I think what's happening, since the government's not making everybody do it, people like businesses all over, like, we're just going to cancel public events, cancel flying, reduce all the stuff that we don't need to do, and then let's revisit everything in a month. And maybe reschedule it later. And, once I see that everywhere. I was supposed to go to New York on the 13th. Just everything literally, like, just being canceled. And I have to admit, doesn't it make sense until you get a sense of what's going on with all this? It's easy to restart the ball rolling again, but as of right now, I would have to say, I have no real interest in leaving my rock until May. So I guess I'm a poor example, but I also have respiratory issues anyway, so I'm not the best person to talk to about this. But
on a good day, you're hiding out in your compound in Maine anyway, right? So I think you definitely default to the isolation trend out there. But yeah, it certainly is the saner course of action. Still a little bit surprising that I thought. I mean, looks like SIBO, they really squeaked in under the wire with RMC. If that conference was another week forward, they probably would have had to cancel that as well. So we'll see. Speaking of things that are going on right now, still happening, earnings are still happening. And some big names popping off this week. Monday had Tilray, for all of you still playing in that cannabis sector. You like your earnings in the retail side, Target, Kohl's, Nordstrom, all of them on Tuesday, along with Hewlett Packard. Wednesday, Uncle Mike's favorite name, Dollar Tree, where he does all his food shopping. Zoom Video, Campbell Soup on Wednesday. Good name for this. A lot of people stocking up on canned goods. Maybe Campbell Soup has some interesting ones. And today it was Kroger and Costco. The Costco, at least you can report locally here in Chicago, having been picked clean of essentials. So use that for whatever indicator you feel like. Let's look at some of the earnings move results reports, courtesy of our friend over there in Orat's land. You can find these, of course, theoptionsinsider.com is the place to go. Marvell popped off after the bell. That's Marvell Technology, of course, not Marvel Comics. That would be cool, but no, they're part of the old Diz now. Marvell, they were popping off after the bell on the 4th. They went into their announcement about $22.60. They were pricing in, paltry 2.4%. They were pricing in nothing. And they delivered 11.5%. So it sounds like Marvell blew the doors off from an overall earnings vol perspective. Usually kind of a sleepy name, but not so much. Yeah, closed at $22.60. Opened up again $24.48 and is trading up to about 25.5. So yeah, rallied about $3. So those folks dramatically underpricing some Marvell vol out there. What else popping off? AEO, that's American Eagle. They were also popping off after the bell yesterday. They were pricing. They closed at about $12.87. They were pricing in about 6.5%. And they underperformed. They only delivered about 2.8% movement. So a little bit of underperforming there, which just seems like has been the narrative for most of the earnings season. But Marvell, bucking the trend. A bunch more there you can find over there at theoptionsinsider.com. Also check out the earnings season report. We're coming into the tail end of it, listeners. And so far, seems like the total for all the names that Orat's folks have analyzed, all 561 of them that have reported so far, which is about 76% of the names so far. Looks like 91% is where we're falling. So 100% would be exactly in line with all the average of the straddles. 91% means we're shy of that a little bit, actually. It looks like every week this season has averaged less than the vol they're pricing in. So this is one of those seasons, one of those cycles where they overprice the vol maybe a little bit and it comes in. Of course, next season they'll probably do the opposite. They'll squeeze the vol a little bit and we'll outperform. We shall see. But right now, at least, looks like the season looking a little bit weak overall from a total vol perspective. Speaking of weak, let's see. I have no idea what our Eye of Sauron is going to find us. Let's find out a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. Mr. Rock Lobster, I have not looked at these at all. I have no idea what our Eye of Sauron has sent us today, so we shall dive into it together. Bravely venture forth. Not so much from your compound, because you're kind of stuck there, but bravely venture forth into the weirdness of the option space today. So hopefully you're ready. Hopefully you got your weird analysis pants on. Going to kick things off. Looks like a newcomer here to the Odd Block. Not a name I certainly follow on a regular basis. This is Redwood Trust, Inc. Once again, Mr. Rock Lobster, looks like we're going back to the REITs, because this is a REIT. ticker symbol RWT, trading $17.25. Off looks like about half a buck or about a little over 3%. This is the name that's had a bit of a topsy-turvy year, as a lot of the REITs have of late. A year ago, it was trading about $15.83, so a little bit shy of where it is right now. And over the course of the year, it seemed like it slowly got on the rally, got on the upswing. Looks like it peaked out at nearly just a tick over $18 back on Valentine's Day, actually, a couple of weeks ago. So it got from about 15 and change all the way up to 18, and then looks like something, either the earnings or something else, or could be a little Corona love, combo of both. Either way, this thing took a huge bath over the course of the next few sessions. Obviously, got a little bit of downside beta with the market here, probably. Sold off from about 18 down to about 16.5, and then it rallied back up to about 17.80, and now it's selling off again today, down to about 17.25, where we find ourselves today. Mr. Rocklopster, see what our Eye of Sauron has found for us. By the way, it seems like 5,000 is like the trade du jour today. 5,000 lots are what our Eye of Sauron seems to be picking up today. First up, we've got the OC 17 halves going up for 50 cents. These are on the bid here, Mr. Rocklopster. They were 50 cents at 60s. Looks like someone may be doing a little bit of the old premium harvesting, taking 50 cents off the board. 17 half, pretty much in almost at the money option right now. So someone perhaps fading a little bit of what's going on out here, thinking this is not going to rally again anytime soon. So we got a 5,000 lot of those. As I dig in a little bit deeper here, Mr. Rocklobster, as I like to do. Also looks like we're seeing some puts lighting it up as well. OC 15 puts. So maybe someone looks like they're legging into a bit of a collar, almost doing it zero cost. Actually getting it for a nickel credit. They're doing on a ratio, though, only about 2,500 of the OC 15 puts going up at exactly the same time as these calls. So I'm going to go out on a limb and say they're related, even though they're not marked spread here. So doing these for 45 cents. So looks like paper probably buying those and then selling the calls for 50 cents to finance them. So looks like they're a little bit spooked about some downside and not really too concerned about the upside because they're overweighting to the upside here. Looks like 1 by 2. Total volume on both of these, about almost 6,000 on the calls on the day, total on the strike, and almost 3,000 on the puts. So I think that 5,000 by 2,500 is pretty much the main trade to focus on here. So Mr. Rocklobster, a little bit extra here for you to digest. Looks like someone perhaps legging into a bit of a ratio collar here and getting ahead of themselves on the upside, saying there ain't much upside here in this one until October. You know, if the Viceroy was here, you know what he would say. This guy should have sold the stock then. If he's that worried about it and looking to lock in two handles and do ratios to the upside to get rid of it, maybe he should sell it. So I don't know, Mr. Rocklobster, what are your thoughts? It looks like someone maybe legging into a bit of a ratio collar. Are you down with that?
I am down with that as of right now. Yes, I think that's a very reasonable spot. And also in a market like this, do you remember trying to get more than 5,000 of anything done in a pit? In a market like this?
Yeah, it's a bit of a challenge.
Do you want to get anything more than 5,000 done in the size of this pit? So I think a collar makes absolute and total sense for anybody right now that is looking at the bottom of the I'm not going to say this is a ball apocalypse. This is actually, to be honest, stuff like this is a little more scary. It's like steady, just sell, sell, sell. You know, you remember those days, like when we had those just kind of grinding markets, and people want out until they want to have a reason to stay in. So, and as of right now, kind of hard to have that compelling reason to stay in, as far as I can tell.
And of course, I joke about selling the stock. There are institutional clients out there who can't sell for a variety of reasons, tax purposes, other things like that. So in that case, a collar might make some sense. I'm guessing they probably wish they could get that protection a little bit tighter, up to maybe closer to the 17 strike rather than 15. That's why I'm always dubious about zero-cost collars. You know, buy the protection you want first and then find a way to finance that rather than lining everything up there in pretty much the same month there, because they were both October, and then trying to find a way to make that zero cost. I think you could have got a little bit tighter protection if you got a little bit more savvy with it. But c'est la vie. He's out at the 15 strike, so I guess he's happy with that. Let's move on here, see what else we got out here in our IF. So it looks like a lot of newcomers today, Mr. Rocklobster, which is I think you might expect for a day like today, and also kind of fun. It's not just our usual usual suspects here. Let's go to, what do we got? What's the Eye of Sauron got next? APD. This is Air Products and Chemicals, Inc. Trading, this is the rich one. The other one was a little bit too cheap for your blood. Well, don't worry. We got you covered now. $231.70, off about $5.50 or about a little over 2.25% out here. This is a name that's had an interesting year as well. By the way, this is a company that makes, principal business is selling gases and chemicals for industrial uses. So an interesting name to be having a big move or a big paper on a day like today. Maybe they make something that is coronavirus related. Maybe make something that can disinfect it or something along those lines. Who knows? But a year ago, they were trading $179.25, so well shy of where they are right now. So they had a pretty decent year. They peaked out at $257.01 up until about a week or so ago. I wonder what happened about a week or so ago. But they got their wings clipped pretty aggressively, along with a lot of other names out there, and they sold off pretty hard. It went from 257, I should say, 257.01, down to 219 in pretty much the blink of an eye, a couple of sessions. So they took a drubbing. They have obviously rallied from that now. They're up a little bit. They're to 231, so they're off that near-term low, but still rough couple of sessions here for Air Products and Chemicals. Let's fast forward, see what our Eye of Sauron found for today. Another 5,000 lot, Mr. Rocklaus. Probably speaking to what you're talking about earlier, the difficulty of getting much more than that off in a market like this. It was the 220 puts going up in March. So pretty much right near, let's see, where did it bottom out a couple of sessions ago? Bottomed out 219.61, so right at that level, 220 puts. Someone looking at those and saying, you know what? Oh, maybe not. Let's see. These did not go up late. These went up on the Philly for $3.15 and some splits there on the end. These things were $3.40 bid at $4. So, Mr. Rocklobster, this could be the opposite. This could be someone getting a little bit dicey, getting a little bit aggressive, deciding to say, hey, I want to sell some of these bad boys. I want to draw that line in the sand at 220, saying this far and no farther. And if it does go that far, I'm buying myself some Air Products and Chemicals because I like this. This could be what you're talking about, a little bit of dibbling your toes into the water here. They did them for $3.15. Again, they were $3.40 bid at $4. Again, probably speaking to how difficult it is to get 5,000 of anything done today. You have to go through the bid that aggressively to get all those done. Worth noting, there are earnings, but not in this cycle. Next earnings are the 22nd of April. So this is not an earnings play. This is just a near-term, pretty aggressive line in the sand here. This guy, it decides if he is buying it, he's buying in around the 219 level or so. I guess you can argue it's not a bad level. It's certainly not the 52-week low, but it's not. It's right about where we bounced last time. So, Mr. Rock Lobster, are you feeling this guy is also perhaps writing a little bit of an aggressive line in the sand here? And if so, it kind of speaks to the difficult nature of getting 5,000 of anything done today, sir, let alone in a active and liquid name like Air Products and Chemicals.
Yeah, I'm looking at that, and you think like, well, you know, blah 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 blah. I would say that's an aggressive line in the sand. I think to me that looks like just a straight yield play. They're going back to going back to the fall for prices as far as that goes. So basically, before everybody went crazy, I forgot the reason why we started rallying it around. Oh, the trade deal. You know what's funny is nobody's talking about that anymore. We had the trade deal dominated the news for 2 years, and you haven't heard shiitake about it. So I think this is a stock that rallied hard on it. And, and then, the bloom is off the rose, and now somebody's just picking up that lower level.
Yeah, interesting stuff here. I'm going to put this one in the to-be-watched category. My producer reminded me there as well, going back to the OIC conference really quickly, we also, of course, host all of the panel audio. We are the exclusive home for all that panel audio as well. So all of you have come to know and love and I know there are many of you out there who can't make it to these conferences but like to hear what's going on in the industry. You won't have that as well this year. Maybe we'll see. Maybe I'll see if I could work my magic behind the scenes to make something happen for you guys. But speaking of magic, let's see what magic we have left in store for you here with our final name here. What is our Eye of Sauron? Let's get weirder with our final one, Mr. Rock Lobster. I'm glad, going back to the Viceroy, I'm glad he is not here for this one because he would be deeply offended. Because if $200 some odd was too rich for your blood, don't worry. Our final name here, SNSS Pharmaceuticals, Inc., ticker symbol SNSS, trading a whopping 94 cents, up 2 cents. This is the fun one. This is what happens when you crank away the Eye of Sauron, let it run free on a day like today. It finds you some weird ones. This is one you could probably argue, and the Viceroy certainly would, that this stock is an option, but let's get away from that for a second. What do we see, Mr. Rock Lobster, today? Looks like someone decided swing for a little bit of the old fences, gobbling up 4,605. So he couldn't even get 5,000 done. He got 4,605 of the March 1s. Yes, the one strike calls, listeners. I won't even bore you with the vagaries of the stock. A year ago, it was 54 cents. Got up to about $1.70 in April, so looking pretty good. Then it sold off pretty hard. By the time December came around, it was 30 cents. Hit a low of 20 cents this year, and now we're at 94. So well off those lows. Someone looks like they think the party's going to keep going, Mr. Rock Lobster, to the tune of got to get at least to $1.20, make this bad boy look pretty good. So I'm going to put these in the to be watched category because these are just kind of silly, kind of fun. Maybe we'll get the Viceroy on and get him angry about these. But what do you think, Mr. Rock Lobster? Kind of an old school play, even though a very cheap name. Taking roughly 20% of the value of the stock to swing for the fences through March, sir.
I can't believe the Viceroy hasn't just forced his way through the phone lines on this one.
His ears must, wherever he is, his ears must be burning.
I think, you know what, at the minimum, his hat is now askew on his head.
his hat has actually fallen off, and the monocle. And he's saying, why am I suddenly all askew? It's because we're talking cheap options.
I think, you know what, he would see this, and it's sort of like, you know, when they call it a yard sale, when a guy on a snowboard just flies and all the crap comes out of his jacket and is flying all over the place. That's kind of what's happening to the Viceroy right now. He doesn't know what to do with this one. Why buy the calls? I don't know. And I hope it works for them. It certainly could because, heck, it's a biotech, and anything that has biotech connected to it is the only stock that's up today. So, sure, it could work. What the heck? Go pay 20 cents for those calls that are going to expire next week, and, you know, they could ring the cash register. It might be worth watching in case they know what's going on, but it's definitely an odd one for sure.
An odd one. Let's put it in the to be watched category. See how this 90-cent stock fares in the near future. I always love people paying extraordinary percentages of the stock to swing for the fences. Just for not even March seems so far away, but it's a few weeks. Fun. As we keep on rolling, let's see what fun you guys have in store for us. Probably some weirdness as we get on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the deal. It's Thursday. It's time for you guys to take the reins. Your Q's, our A's. We got all kinds of weird ones, I'm sure, in store for us. Let's see here. All right, let's kick it off. Dom wants to know, what is a good easy for me to say. What is a good use case for long straddles? I know that they erode quickly and are expensive. What's the upside? Well, probably looking pretty good on a day like today or a week like this, Dom. I think a week like this is kind of the poster use case for long straddles. You can do a lot with them. You load up on them. They're crazy expensive, right? But, of course, you're getting moves to the upside and to the downside. So if you keep it on and you're savvy about your delta hedges, your scalps, your gamma scalps, you could hit the bottom, hit the top, make some nice hedges in between, more than pay for that straddle, and also have, the nice movement of it. To boot, of course, you can just use it in one direction and take it off. Either way, this is kind of the cliche week people point to when they're out there telling you should load up on these things. At least right now, they're crazy expensive, but at least right now, the moves are paying off for it. Mr. Uncle Mike, I know long straddle, not exactly a huge tool in your arsenal, but good old Dom wants to know, what is a good use case? So when you're in your pantheon, in your lexicon over there, what is a time when you would say, hey, you know what? Time to break out the old long straddle, sir.
I can't remember the last time I've ever done a long straddle in 15 years of doing this. I I think that if you are going to do it, you do need to be pretty savvy of when you need to take profits, trade into things, and you need to do stuff with it. I don't think it's a set it and forget it type of trade, but I don't know if I'm necessarily qualified to say, because I'm willing to bet I've done less than 5 long straddles in 15 years of trading.
Yeah, I think that's a good copy. I think most of us, if we're doing straddles, they are components of other strategies. Maybe an iron fly, something along those lines. It's usually not a long straddle by itself. You got some other short wings to help pay for it. But Mr. Rock Lobster, if you were so inclined, and what was our listener's name here? Dom. If Dom came to you in the pitch chat and said, Mr. Rock Lobster, what is a good use case for long straddles? What would you tell him?
Well, I think right now the best use case is, and when I say straddle is, I generally trade strangles. So I do buy a lot of strangles, and it works pretty well, to be honest. We actually have an Edge Hunter sheet that helps you find that kind of stuff. But, the straddle by itself is I think the straddles like that work very short term. The weeklies are a better place for them when you have a lot of realized vol. So right now in a market like this, when you have, to me, straddle trading is you need the vol to come in a volatile market, or in a market that's been moving. So let's say the market's been moving a lot, vol goes up, and then everything kind of slows down a little bit. Market makers take the vol down aggressively in the short term. A straddle then, if you buy it, it is a relatively, I'm not going to say it's risk-free, but it's a lower risk trade because you don't hold it for 2 days, so you can control the theta on the trade. And then if you get a move like we're doing now, like, things move, even a $10 straddle could be worth 10 or 13 bucks or more. So that's one way to do it. I think strangles and VXX have been great trades. That's one of the stuff in my vol newsletter. Just because VXX is decaying up almost $2 per week. So, once you understand how decay works and how volatility works, it changes your whole mind on how straddles and strangles actually work and trade. So I would say most of the time they are not a good trade. They're just going to rot away. But there are times, a lot of times actually, when the market does provide opportunity to buy them, when you're in what I would call a reduced theta scenario. There's many different ways to do that. I know this is very technical, but that's how I teach people. Well, you want to learn when, basically if a straddle's not going to decay, you want to own that trade in my mind, right? Because you basically can own a call and a put for free for a period of time. And once you learn how volatility works, you actually can look for the market to generate that kind of thing. It's not a long-term investment strategy. It is a short-term trade to take advantage of a vol anomaly. And they do exist. I have my pit crazies trade them all the time successfully. I have sheets created for them on vol newsletter, all that stuff. So it's something you can learn how vol works. And so it does work. But one rule I learned early, literally, probably this is 30 years ago, options, where somebody said their options were meant to be sold. That was our vol guy Schlesinger, right? But also as a floor trader, if you buy options, your next job is to figure out how to get rid of them. So when you buy a straddle, again, it's not a marriage, it's a date. As soon as you have a chance to make money on the position, you're looking for, to close it, both sides. And just be on your way. So you borrowed the premium for a while, market moves, premium expands, you give it back to the liquidity provider, say thank you very much, and you move along your way. And don't think about it too much. And once you learn how to trade from the long side, what I would say a long vol side, it also helps you become a better short vol trader, selling spreads, credit spreads, and stuff like that. And it gives you actually a little more room sometimes to sell options when you have some long options you can close. So again, that's a portfolio management thing, but there you go. That was my nutshell in trading straps.
I like that. That does have the ring of Mr. Schlesinger to it. If you buy options, you got to figure out when to get rid of them. That is always the case. And you're almost rid of us. One more segment to go, listeners, as we head around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what the heck we're watching for the rest of this week. I was just noticing some data come in and some tweets, including from Chris Cole over at Artemis Capital, who has been on the Vol Views in the past, likes to talk up his long VIX book, let's just say. But he made an interesting point, which is true. It's hard to believe just 12 days ago we were at all-time highs in the market. Oh, how the worm can turn aggressively. He also points out at 11.5% drop. This barely registers on the timeline of long-term, long-scale drawdowns. And he goes all the way back to this data to 1931. So looking a little bit back there, but still interesting stuff to keep in mind as we're all kind of putting our heads under the sand here with all things coronavirus related. But interesting stuff. We mentioned earlier in the show, there are some earnings if you want to just focus in on the micro and get the heck out of the macro ether for a little bit. I can certainly understand why you might want to be inclined to do that. TheOptionInsider.com is the place to go for that. And let's go around the horn now, see what everybody is looking at for the rest of the week. Uncle Mike, we'll start with you, sir. I'm sure you're pretty much focused on the bear virus right now. Anything else on your radar, sir?
Yeah, I'm watching today. I want to see if we can hold 3,000 today in the S&P 500. You always wonder in times like this, where would the floor be of the marketplace? And what I think is interesting right now is that we had a couple of tops in the S&P in July, as well as September around the 300 level or the 3,000 level for the SPX. And we're kind of there right now. So curious to see if we can use this as a springboard to go to higher levels. But if not, once again, this market is still for crazy people at this point.
Luckily, all of us here, at least, are somewhat crazy. Hence the reason that we do this show. Mr. Rocklops, I know you got a lot of crazies in your pitch chat. What are you telling them to watch for the rest of this week, sir, into the weekend?
Oh, my gosh. What do we watch? Everything. Watch how backward the VIX futures continue to get. That premium somewhere between like $4 and $8. 30 vols not going away. Look for, I think the only way the selling sort of stops and the vol comes down is if there's somehow this whole coronavirus problem, somebody can put a ring around it and it's just not quite there yet. It sort of just says blown out of the water at this point. The Feds kind of use their bullets. It's like, okay, refinance your house, like do stuff at low rates. Look for, high yielding plays right now in decent stocks. That's kind of the thing you need to do and look for. So that's what I would say there.
There it is. That music, listeners, means we come to the end of this journey. If you're saying to yourself, I need a little more hand-holding through this market, I need to hear a little bit more derivatives audio in my ear holes, got you covered. Got a double dose coming at you. Right after this, if you're listening live, after the fact, just hit next on your device of choice, wherever you're listening to this to. Going to get a double dose of some nice OPR. Going to get some FOMO SPY long call spreads, I think, going on out there on OPR. And then right after that, hot on the heels of that, we'll be back. It'll be Sean and myself coming at you from the Risk Management Conference, talking all things small cap vol. A lot of great data coming out of there. So if you like your equity vol, stay tuned. We'll be hitting that as well as, of course, WTI and the Eurodollars blowing the doors off on the heels of the Fed and the Fed Watch and all the other good stuff there on TWIFO. So you got a double dose heading your way if you're listening live. Speaking of listening live, we got someone asking Mr. Rocklops, we were just talking about long straddles, asking where do we get the index for that? We weren't discussing it. Were you discussing an index about straddles? I don't recall that, Mr. Rock Lobster. So I think they're just mistaken. And then B, aside from that, if folks want to learn more, maybe want to join your vol trading club, where should they go? What should they do? Uh-oh, he's muted. He's overcome with joy at his own vol trading club, listeners. Well, you know what, then? If he's not there, I will plug his vol trading club for him and let you know optionpit.com is the place to go. And, of course, Uncle Mike TOSAW out there as well, stcharleswealth.com. We've come up against it, listeners. We got to run, but don't worry. If you listen to live, you get more fun stuff in your ear holes, and we'll be back in a little bit to talk TWIFO as well. So double duty, OPR and TWIFO coming your way, and then we'll see you back here tomorrow for Vol Views, 1 p.m. Central. A lot of volatility to view, so stay tuned for that. And then it all kicks off again on Monday with more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.